Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, daily chart, and we're just kind of tracking this 50-day exponential moving average on the daily chart. You can see the Bollinger Bands on the daily chart starting to come in here, and they're really, they've really taken a dive on the Bollinger Bandwidth. It's 4.48. They're not tight. Okay, a few more days of this, they could get tight. They're shedding some of this price, and 3, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 20. Oh, okay. Yeah. So they're jammed up because they shedded this day, and basically you're dealing with all of this compression. And you've had a couple little outliers on the way, but it's we've been in a range with the exception of the attempt to break out and the basically immediate pullback. This was those remarks that Powell made that day. They immediately pulled that back, and we are right back where we were 20 sessions ago. So that's why you're seeing this stuff really get jammed in. You got a whole lot going on here. Yesterday was a very small range. On the hourly, you can see things are consolidating. You've got PPI tomorrow, CPI on Tuesday, the Fed announcement on Wednesday. So I was saying in the room yesterday, there are a hell of a lot more unknowns than there are knowns. And when there's way more unknowns than knowns, the tape, it's not going to die. There was plenty of vol yesterday. There was plenty of range on those candles to get done what you needed to get done. It was a good day. It was the best day that we've had this week. But if you're expecting a real commitment to directional pricing, I don't know. Now, it only takes one piece of news for them to throw all that into the circular file, and it probably won't go past PPI tomorrow morning, simply because the function of the bands being that tight. I mean, they're really just basically kind of, they haven't bottomed out. They've been tighter. 0.63. Where were we here? 0.46. Yeah, I mean, they can tighten up a little bit more. They were a little tighter here. They were certainly tighter here. We've seen some very tight consolidations in the last few months. We've talked about those as they've come up. What's interesting is I would say 4 out of 5 of those consolidations have been won by the bears. And I haven't done any statistical work on this at all because I just don't want to. But I would argue that over the course of the prior 8 years, 10 years, I would say that statistic has been flipped, where you've seen probably 4 out of 5, certainly 3 out of 5, 3.5 out of 5 of all consolidations went to the bulls. And as you look at this daily chart, you have a consistent inability to deal with the biggest barometer of price control, which is that 200-day exponential moving average on the front month and the consolidation chart. And as long as we are living our lives below that line, it puts the bears in a position to win a lot of these consolidations because basically we remain a sell rallies market. We rally to 41.10. That's great. Back into 39.20s. Now, I am not a gloom and doom guy. I get accused of being a perma bear when the market's going down and a perma bull when the market's going up. And you know what? I like that because it means I'm riding the correct trend. And nobody's ever accused me of being a contrarian, which is good because that has saved me and my subscribers a lot of money along the way. If you're coming in trying to do the opposite every day just to be right while everybody else is wrong, you're gonna lose a lot of money, a lot of trades. You're going to frustrate a lot of people. So we're consolidating here. We've got news coming up. I'll be interested to see how some of this inflation stuff plays, and we can talk about it next week. If you're looking for 7.9 and it's 7.7, we already saw that goes up. If you're looking for 7.7 and it's 7.5, I mean, they probably bounce it. So, but this little mini consolidation into the end of the week, we'll have to see how this goes. If they break it to the downside, you've really got to start, bears, getting into stuff that has a 38 on it. You've been completely uncomfortable trading anything with a 38 for the last month and a half. You're about as comfortable in the 38s as the bulls are in the 41s. And, cry me a river, means we get to hang out in a 200 handle range. As far as short-term intraday trading, that's great. You can get a lot of work done there. As far as putting money to work over the long term in the market, it's not an attractive situation, which is why we stay in the range. Doesn't make you want to dump everything you own on the stock side. Doesn't make you want to buy a bunch of stuff. Just makes you want to kind of wait. Tape's waiting. All right, what numbers are we looking at here? The hourly mid-band is not as good a barometer as it was a few days. I mean, things never last. I mean, it was good for a few days. It basically spent the entire regular session yesterday, getting chopped up in these huge candles. So that comes in today 39.37. Daily pivot is 36.67. Volume weighted average price is 36.67. So it's about 20 after 7 Eastern time as I'm doing this. There's a lot going on at 37. I've got a proprietary moving average of 42.5. The overnight high sitting around at 49.5. You've got an overnight range of about 33 handles, which, again, is not bad. The fact that, it looks pretty small on a relative basis on a daily chart, that's a 33 handle range, tells you, just how volatile it's been really all year long. And anybody that tries to tell you, and I'll give you my 2023 preview right now in about 10 seconds, and I'm going to shut up and get off this thing. Anybody that tries to tell you that 2023 is not going to be volatile is absolutely smoking something. A lot of it. See if they have any. Because it's going to be very volatile. The number of problems that have been solved in 2022 heading into 2023 is exactly zero. So it's, more to come, basically. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. Come trade this stuff with us. Talk to everybody tomorrow.